Interest rates are our focus this Wednesday. Federal Reserve Chair Janet Yellen told Congress today that global economic troubles and the recent sell-off in stocks could rattle the U.S. economy, raising the prospect of a delay in interest rate hikes. Who better to speak interest rate hikes with than Jim Grant? He's the founder and editor of Grant's Interest Rate Observer and the author of The Forgotten Depression. Jim, good to have you back in studio.
Nice to be here, Daniela.
So, Jim, what a great day to have you on. Let's talk about interest rates.
What interest rates,
right,
Daniela?
Well, what do you make of Yellen's comments today?
Banal and inoffensive, as is her wont. What she means to say is we keep our options open. But you know what is astonishing is how little time it has taken for a consensus to, once it has formed around like 4 rate hikes in 2016, to shift very violently to the prospect of not only no rate hikes, but perhaps a little excursion into negative nominal interest rates. So it's been quite a snapback in expectation.
Well, last time we spoke, you said, perhaps the Fed was rushed to raise rates, and maybe they should have raised rates.
Well, I think the Fed missed its market, as we say on Wall Street. I think it raised its little tiny, seemingly insignificant rate in December because it felt kind of an institutional imperative. Its institutional dignity was caught up in this. It had said it was going to raise in 2016. It didn't in September.
Right.
Finally, people come in, would you please do it? Would you just so we can talk about something else? It would be a mercy. Okay, fine. So they raised the rate.
Right, so they were back to normal.
And then the next day the stock market went up and they said, oh, who's the man? We raised the rate, right? It turns out that it was perhaps the right idea at exactly the wrong time because what followed was a kind of deflationary vortex in the world's financial markets, debt markets, and perhaps in the world's economy.
So what do you make of all this right now? What do you make of the current scenario, the volatility we're seeing in the markets right now? What's going on with the Fed? What's your...
Well, I think that it is a demonstration of the failure of what we at Grants call the PhD standard of monetary management. This is the regime whereby former tenured economics faculty run the world's monetary powers. They seemingly have one idea, which is that it is okay to override the price mechanism, okay to administer financial markets, to talk them up in the interest of spreading the so-called wealth effect. So for several years now, many years, time does fly, the Fed especially has been on a campaign to lift up asset values, thereby, says the Fed, to make us feel richer, so we will spend more, raise up what they call aggregate demand. But it has been, I think, a demonstrated failure. So we're living with the consequence of this. What is QE? What does ZIRP do? Well, they pull forward the fun things like consumption, and they push out in time the bad things or the distressing things, like necessary things perhaps, like corporate failure. Right? So if you're a company on the brink and you can't finance with higher interest rates, they'll let you finance with lower interest rates. So we have had an artificially benign credit environment, and we have had an artificially expanded or inflated consumption pattern, especially in automobiles. So perhaps now the good stuff pulled forward is ending, and the bad stuff pushed out is upon us. That's my view of the Fed's campaign.
So not a lot of optimism here.
Well, this word optimism annoys me. I am an entrepreneur and a father of 4. I'm the most optimistic guy I know. I think it's about reading the facts.
Well, let's talk gold now.
Ah, yes.
Yes.
I thought you'd never mention the subject.
So I know you don't like calling a bottom, but this has been a...
Well, I've had substantial practice in calling a bottom in gold for years now.
But
I'm the world's leading authority in when the gold market will not bottom.
But it's been a good week, right?
Yes. Well, let me tell you what I think about gold. Now, I'm as bullish as I have been, most unprofitably. But I feel that gold is the heir to the errors of our central bank, particularly. So what I mean by that, I mean that the chatter now among the monetary avant-garde is negative interest rates. And then 29% of the world's sovereign debt market is at less than 0. So it's not an idea, it's a fact. And another idea on the make is the abolition of large denomination bills and the regulation of cash in the interest of suppressing terrorism or something. So what do you do if you have wealth and you hear the central bankers talking about negative interest rates, a tax on your money? And what do you do if you have been holding cash, dealing cash for your own reasons, you're not a terrorist, and they say, well, we're going to take that away from you? would the thought occur to you, perhaps the world's legacy monetary asset, which they can't fabricate on a computer keyboard. So I think gold is going to be coming into its own in reaction to the wrong-headed notions and policies of our central bankers.
So you see prices headed higher this year?
I do, Danielle.
Wow, well, you said it here first, Jim Grant.
No,
all right.
I've said it here the 500,000th
Right,
time,
all right.
but it's sincerely held belief.
All right, Jim Grant, liking gold these days. Thanks so much for joining us.
You are welcome, Danielle. Nice to talk to you.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.